Okay, quick sound check. 1, 2, 3. How's everyone? Welcome back to another webinar session. A lot to talk about. There are a couple of trades running. What about gold today in US session? We are actually going to talk about that in a minute. Yeah, audio seems to be good. We're just going to get started. General advice and risk warning disclaimer. Note that any advice given is deemed to be of general nature, as the information or advice given does not take into account your particular objectives, financial situations, or needs. Therefore, at all times, you should consider the appropriateness of the advice before you act further. CFDs and Forex are leveraged products and thus carry a high level of risk and are not suitable for everyone. You can lose more than your initial deposit, so you should ensure CFD and Forex trading meets your investment objectives. Strategies and charts used in this presentation are for example only. You are reminded that past performance is not indicative of future performance. Okay, so let's quickly talk about the dollar index to begin with, and one of the key drivers on why this one is dropping so hard so quick. Partly is because the basket is 60% euro. Euro is getting slammed right now. I want to talk a little bit more about the dollar index and the 10-year Treasury yield, because these are the two things that I always put out in my outlook for a few good reasons. If you can take a look at the dollar index right now, it's actually moving up, but the 10-year Treasury yield is actually pretty flat. It's actually down at around 2.8%. So what does this tell you? Let me just bring out the 10-year yield so you can see what's going on here. This is the 10-year yield. You can clearly see there's quite a difference here. We've been talking about, if the US 10-year yield goes up, the dollar index, the dollar usually strengthens with it. Now, the bond prices is going up, so the 10-year yield is actually going down right now. What does it tell you? It tells us basically this: the dollar strength. It's not a matter of being correlated or not to the 10-year Treasury yield, but we can take that away. That there's a little bit of a disconnect right now between the 10-year yield. So what I'm trying to say is the 10-year yield is actually pretty normal. This is pretty stable, around 2.8% to 3%. That's kind of the normal range. But we see that push in the dollar index here. What it's basically saying is that between currency pairs, outside the boundary of Treasury and its correlation to the currency, we are actually seeing real dollar strength right now. This would be under that category where we talk about the risks off market. This is where we actually see risk aversion. So what we're looking at in the market right now is that there's actually a move towards the US dollar and the Japanese yen as safe havens, but not so much on gold. I believe gold has actually dropped down to 1800. So in terms of safe haven right now, there are actually two. It's the US dollar itself and the Japanese yen. Now we're going to take a look at the excuse me. We're going to take a look at the Japanese yen later on, but I just want to explain a little bit about the dollar index and the 10-year yield. We are actually looking in a market where it's actually pretty normal. We're not looking at an extreme yield. If you take a look at the VIX, that's actually dropping down as well. So we've got the 10-year Treasury yield stable, the dollar index pushing higher. So we're actually looking at, kind of the real underlying dollar strength right now in the market. What pairs this? This is actually the dollar index. I normally put this out in the Outlook every Monday, and this is an English session. We're not here in Hindi or in Bahasa or in any other language except English. Okay. Good to have you here, Joseph. Good evening, Mikamaya. Okay. Pak Denny, Pak Bambang. Okay, great. So, we were pretty clear on the difference between the dollar index and the 10-year Treasury yield this week. So we want to focus a little bit more on the dollar strength, especially this week. We've got the NFP. ADP is tomorrow, and then we've got NFP on Friday. Other than that, we actually don't have a lot in fundamental, except for the JOLTS number, which is not really high impact news. Okay, so let's jump in straight into a couple of the trades that's already been running. Let me just double check. Sorry, pound USD. Let me just go into the hourly. So you can see kind of the logic behind the pound USD here. Cable, this is short. If you guys want to go short right now, in terms of risk reward ratio, it's going to be a little bit different because we are kind of nearing the target around 127.2%, and there's a couple of reasons why this trade was taken. One is that, let me just remove this for a minute. You can see where the rejection is. It's at 38.2%. If I bring out my hourly pivot, that's where the pivot point is also located. So we actually have a rejection from the pivot midday, basically the UK session. So if you are trading the UK and European breakout, you probably pick this trade up as well in the pound USD and as well as in the Euro USD. But in terms of target identification, if we are using FIBs, we actually have a new FIB cycle to go with. So it's actually your choice if you want to target 1.185. 1.185. It's kind of okay if you go for 1.185. I'm just going per normal, targeting 127.2. That's also at 1.1875. So we're dealing with two psychological levels here. One is at 50, the other one is at 75. So the option is yours. If you are in this trade, then I'm gonna get rid of the FIBs. You kind of know where the logic is from the FIBs, but that's basically your target level. So if you're already short in this one, your risk is not that much. I mean, it's not that great. You can have your stop loss at 1.2, but I just put it at the latest swing high, just right around the pivot. You can kind of track this one lower already if you have a position, and if you want to move your stop losses, you can move it to 1950. If you are a bit more aggressive, you can lock it into 1925, but let the trade run. Momentum is on your side right now in terms of the hourly trade. We are actually going to jump into the 15 minutes today once I go through what are the trades available. And then see if there's actually any that we can actually take on the US breakout. I'm going to explain a little bit more about the US breakout. So for those that are new about US breakouts and whatever not, don't worry too much about it. I'm going to explain it as best as I can. We only have a 2-hour window starting from the previous hour. So we basically have 1 more hour to go, and that's it. You can kind of look into a potential 15-minute trade if you're going by the US breakout. But what I'm trying to tell you right now is that the overall trend has basically shifted to the downside for pound USD. I've got the previous day pivot. The previous day pivot was pretty cramped, not much space in there. I mean, if you take a look at support 1 to pivot, we are looking at about 50 pips in terms of range, but today that range has increased a lot. We are looking at 137 pips compared to 50. You know, that's nearly triple, right? What is it saying is that this is no longer in a sideways market condition. This is actually breaking to the downside really strongly. We've got momentum quickly on our side, but it's limited because this is closer to support 1 rather than pivot. So if you take the trade during the UK breakout, you're good. You can start locking in your profits. But if you are planning to jump in right now, we need to jump into the 15 minutes time frame and see if there's any potential trade to take. But I think from the speed of the movement to the downside right now, it's a little bit tough to kind of jump in without a lot of risk. There's a lot of risk involved if you don't have a running position. If you do have a running position, you can start locking it in. Okay, so this is pound USD. We will jump back into pound USD in a minute. Let me just bring up pound yen. Okay, so similar situation with the pound yen. This is no longer in a sideways market condition. You can tell. And the reason why I'm guiding you guys through all these pivot levels is that let me just get rid of the verticals. Okay, so the reason why I've been guiding you guys through pivots in the past 2 weeks or so is that I want you to start using pivots in your tools if possible, wherever possible. I mean, if you guys are using moving averages and stuff like that, it's more dynamic. We don't actually have a very static number to work with. But from here, apart from having a static number to work with, we can actually see if a market is starting to break out from its range. As you can see, the range of the pivot itself has actually tripled again. So in terms of sterling is actually really weak. I don't know if it's because of the political issue in the UK right now with Boris Johnson on how he handles these sexual assault allegations, or his senior ministers are resigning. We've got the exchequer resigning, and that's basically the finance minister resigning from a post, and the health minister. I think those are pretty big deal. I don't know if there's any correlation with it, but I don't quite care, because what I'm looking at from a technical point of view is that we are no longer in a range bound market condition. We are starting to trend to the downside. Now this trend could end, today's Wednesday, it could end tomorrow, it could end before Friday, we don't know, but I'm just going with the flow right now. Sterling yen, similar situation. If you have a short position in sterling yen, this is actually a new fib that you can actually deploy. That's basically from here to here. It's just 2 candles, but if you go into the 15-minute time frame, you can see very clearly how this trade was actually taken during the UK breakout. Okay, so we actually have a transition below the 23.6%, just at the Ichimoku cloud. The Ichimoku cloud was pretty thin, so we have a direct transition back below the Ichimoku cloud. Now, in terms of momentum, the 15-minute time frame, it's still below 20. So we might actually see this one touch 160.50. Okay, that's where the exit level as well. So if you short sterling yen, I know some of you are short sterling yen. I know some of you are pretty good at the UK and Euro breakout. These are your exit levels, basically around 160.50. It might go down a little bit more. It might go down to 160, but just to be safe, if you have a target level, then have it at 160.50. I'm not even placing it at 127.2% because it's just 8 pips below 1. Okay, I think I disconnected for a bit there. So let me go back to 160.50. Anyway, if there's any issue, let me know in the chat and I'll take a look at it, and I'll go through the questions on the chat in a minute. But for sterling yen, if you're short sterling yen and you're thinking where to get out and stuff like that, remember that this is already below support 1. You could be targeting 160.50 if you're a little bit more aggressive. You could be doing 159.50. Do we have enough momentum for that one? Yes, there should be enough momentum for that one, but it might stall a little bit around 160.50 and 160. So be mindful if you're short sterling yen in terms of target. Don't get too greedy. This has already touched support 1. Doubt. Actually it becomes really hard for it to touch support 2, considering the range has actually tripled as well. Okay, so let me go through the chat. I'll pause for a minute. Let me go through the chat, and any requests on any currency pairs you guys want me to take a look at, do let me know. I'm just discussing some of the trades that I actually took. The other one is actually Eur Usd, but Eur Usd is not that much of a talk. Okay. Don't forget Euro Yen. Okay, so we've got a case on Euro Yen. So this is what I'm talking about. I know some of you are probably really good with the whole Euro UK breakout. So some of you are probably short this position. I didn't take the Euro Yen. I was more focused on the sterling. I did take the Euro USD, but I don't think it was a great trade for sterling yen. This is actually going to be a little bit unique in terms of finding a take profit level for the Euro Yen. It's actually very similar to the Euro USD, which I'll discuss after this. I'll just help out with the Euro Yen first. Now, in terms of intraday target levels, we are actually kind of past that. In terms of fibs, I think this is actually too small to consider a fib. Okay, because basically it's reaching 161.8%. But if you do have a short position for the euro yen, you might want to consider getting out around 137.50. Beyond 137.50, you have 137. So I'm actually going to outline two levels. The first one is 137.50. Okay, 137.50. By the way, you can start locking in your positions in terms of the euro yen. This one here is a little bit unique because this one is more of a range breakout rather than anything through the fibs or the pivots. We basically didn't even touch the pivot level. We actually just moved down, tracked down lower, touch support one, break support one. So this could get a little confusing. You might want to scale out your trade. If you have a short position in euro yen, you can start scaling out because this is already below 138. It's below the support one level as well. So the ideal strategy to get out is that you should have already scaled out about half or maybe 1/3 of your position. I don't see any reason why not. If you have a short position, your entry is probably around 138.50 or 138.60. You should consider scaling out. But if you want to have a specific target, you can go for 137.50 and then 137. Now, just keep in mind, this is not even support 2 yet, so you want to take your targets in between where price is right now to support 2, just to be on the safe side. You don't want to see price really approaching support 2 but never touch support 2 and then bounces back up to 138. Okay, so that's the risk with euro yen right now that you need to consider. There's potential turnaround towards 138. I believe the 50 minutes momentum could be running out of steam. Okay, so yeah, this is really an extension. You've got your 137.50. That's basically where the 161.8% is from the swing today. You might want to use that one for your exit levels for the euro yen. The other one is Eur USD. So this one, I'm only just aiming for support one. This is already broken. One of the few reasons on why I'm targeting so low on this one is that we are very close to 1.02. So we broke below 1.02. We haven't really gone below, or we haven't actually closed below 1.0175. Okay, that would be the next hourly close that you need to keep an eye out on. If you're wondering how to trade the Eur USD on in terms of targets and stuff like that, if you go by the hourly time frame, it's actually going to be really tough to look for a target using Fibonacci, because if you go by Fib, then this would be your range, and we are past 161.8%. It's not a great trade, but we can go by this. Okay, that's around 40 pips, and if you take a look at my target level, it's also around 40 pips. So we're basically just looking for a breakout on this one. Okay, so the Eur USD, I think this is pretty much done. If you still have a short position in Eur USD, you might want to consider moving your stop losses to break even. Okay, and then let this one run. I think that would be the best strategy right now to tackle the Eur USD. Instead of having your stop losses above 1.0250, we actually break below 1.02. So if your stop loss is around 1.0225, it should give it enough room. So I don't see a reason why you shouldn't be moving your stop losses to break even. So if you're not used to moving your stop losses to break even, maybe you want to experiment with that, or maybe if you want to lock in some profits. Once this one break closer, or this one move closer to 1.0150, let me just draw 1.0150. If price comes near 1.0150, you might want to consider scaling out, or moving your stop loss to the initial target level like this one, 40 pips. I don't have this trade running right now. If this trade is still running, I would have moved my stop losses to my target level or support one and then just let it run. But unfortunately, I'm no longer in this trade. So yeah, for those that are still in this trade, feel free to adjust it, lock in your profits, manage your risk properly, move your stop loss to break even, or lock in some profits. That's should be fine. Okay, so yeah, we've got Eur USD. Explain to me what is happening with the Kiwi pairs. I think this was in the outlook. It was on Monday. It was in the outlook. It was actually from last week. The drop was actually from last week. The drop in copper prices and the drop in commodity and metal prices, that triggers a drop in the Aussie USD and the New Zealand dollar. Those two are what we call antipodian currencies, and they're also very, very closely related to commodity prices. When we talk about commodity prices, we're talking about metals normally. So copper, nickel, iron ores, those are your stuff with Aussie. How much will the commodity market fall? Okay, define commodity market, because I just explained we have a little bit of a difference in terms of commodity market. We've got gold, right? We've got silver, we've got natural gas, we've got oil, UK oil, US oil. I don't think you can actually trade nickel and copper on the platform, but I could be wrong. So when we talk about commodity prices, define that a little bit. I know the overall general tone for the commodity prices like gold and stuff like that is falling down, but in terms of oil, it's actually not that bad. It's actually still pretty okay. So let me just go back. So we're done with Eur USD. Dollar Swiss is going to go uptrend, but anything on that? Well, unlike the pound USD, with the Euro USD, you can actually tell it's actually breaking out as well, right? So if you have pivots available to you, please deploy a daily pivot. Okay, and I'm gonna explain again for those that just jump in. If there's two pivot lines here, I'm going to hide my Ichimoku cloud. Okay, I believe I can. Can I hide my drawings? Yes. Okay, so if you take a look at whatever line it is on the chart right now, so the black line is your pivot line. The red one is resistance, support is blue, and so forth. We've got 2 days worth of pivot right now in front of your screen. If you take a look at the first one in terms of range, this one, it's around 37 pips. The range today, in terms of range, we are looking at 150. So it's very similar situation with what I just showed with the pound USD. We're no longer range bound. This is actually starting to trend. So pivot can tell you that the range just starting to widen, and that's basically your cue that the range has been broken. We're back in more of a trending mode right now. With the Euro USD, we already take a look at the Euro USD. Now let's take a look at the dollar Swiss. This is likewise very, very similar situation. But in terms of dollar Swiss right now, in terms of the whole movement, I need you to be more cautious. This is noticeable on the hourly time frame. I'm not sure it's noticeable on the daily, but let me just check. Daily should be good. Okay, so don't push this one. There might be a deeper correction going on here. Let me just, yeah. So if you take a look at the stochastics here, it's actually sloping down a little bit, just a little bit, but it's sloping down, right? In terms of price, we're actually seeing a new high. We're actually seeing a higher high in price. So that's more of a class A divergence. At this point in time, I'm not going to classify this as a key divergence because it's only negative 1% on the degree there. But we are stuck at resistance 1. Okay, so do not push this. It's the same logic that I have with the Eur USD, unlike the one with the pound USD, where there's actually a little bit there's a little bit of room to go. In terms of dollar Swiss and the Euro USD, both of this has actually touched support 1. It's actually it's actually at support 1. This might get overextended a little bit, but for dollar Swiss, you definitely want to focus on 97.25. Okay, so 97.25, basically give or take, it's about 5 pips away from the resistance 1. It's a psychological level, and if we go by, I'm gonna hide my pivots first. Actually, I'm gonna hide it first and see if it actually overlaps, right? But dollar Swiss 161.8. I'll zoom in. This is kind of your intraday limit for the dollar Swiss as well as the Euro USD, because it's both of them has actually gone beyond the intraday 161.8%. So let me overlap the pivot level. That's basically at around 161.8%. So be mindful with dollar Swiss tonight. If it clears off, if it closes above 0.9725, it might have a little bit of a room to go towards, maybe 0.9750. But right now, where the resistance 1 is, or at 0.9725, 0.973, be mindful. It might be too early for you to jump in short right now, but we'll check on the 15-minute time frame if that's possible. Soon, yeah. Hopefully we might be able to see this before the hour close, but if by this hour it actually closes below 0.9710, or even better, below 0.97, you can actually start thinking for a potential short intraday for the dollar Swiss. This is going to go against the overall general trend. So if you're not okay with going against the trend, do not go short. But if you're just here for a short-term intraday trade, this one is okay. If we consider we are near resistance, and the logic is that the resistance might fail. If that resistance fail, then we might see a little bit more of a deep potential correction, potentially back towards 97. In terms of range, it's actually not huge, so I'm not going to take it. I just don't like the scenario where the range is actually pretty small like this, and I don't actually counter trend a trade. So, but I don't know if you're potentially looking for a short-term intraday trade, or maybe you're thinking of, should I get out of my dollar Swiss? You've got your resistance right now is at 0.9725, spiking a little bit, but only go long dollar Swiss if it actually closes above 0.9725. So only go long if it actually closes above that and potential retest, and then you can go long. Okay. So you got two scenario. I don't like the short scenario, but if you guys are looking for a potential short on the rejection of that, by all means, go for it. But make sure your stop losses are really, really tight. You don't want to have anything beyond 0.9750 even. Okay, if you're planning to go short, your target level is potentially just right around 0.97. Is it worth it? You're just aiming for 25 pips. I don't really think it's actually worth the trade. In overall tone, the general tone for the dollar Swiss is that if you do go short on the dollar Swiss, you're 10 pips. If you like 10 pips, if you like 15 pips, if you like 20 pips, if that's your taste, then yeah, I mean, that's kind of the limits that you have. You're not probably risking a lot, but again, giving us 10 pip stop loss to the market in an uptrend, it's kind of ridiculous. So I don't really like this trade. I much prefer to see a potential break above 0.9725. Stochastics maintain a position above 80 level, then we might actually see a little bit of an extension towards 9750. So for new trades, I'm not gonna say I wouldn't recommend. It's up to you. If you trade the dollar Swiss and you know the dollar Swiss well, and I expect this to have a small range, and if you're okay with that, by all means go ahead with it. I'm not a dollar Swiss trader. I don't trade the dollar Swiss. okay, because the range is just too small for me. But if you like it and you kind of know your way around it, by all means go ahead. If you have a long position in dollar Swiss, you might want to consider the 97.25 as a potential resistance. Keep an eye out on this hour. If it does break above 97.25, then move your stop losses to break even, lock in some profit, let this one run to 97.50. That's okay. Okay, but I mean, if you, in terms of looking for a new position, I don't like where the dollar Swiss is located right now. It's basically at resistance 1, and I much prefer to see this one break above resistance 1. Otherwise, this is actually going to go loop back there. It might actually stay within the range, and the range is actually not huge. So think about it. Just be mindful on this one. The difference between pivot and resistance 1. It's only just about 60 pips. So we're not dealing with the same volatility like in the Eur Usd and the Pound USD, the Pound Yen, the Euro Yen. We're not dealing with that kind of volatility with the dollar Swiss. Is it doing work straight on swing style on crypto? I'm more of a, for me, I don't swing trade the crypto. I'm more of a buy low and then hold kind of guy, but that's just me. Will swing work? Will all swing strategies work in crypto? It might. It should. Theoretically, it should. It's just that in terms of speed, it's different. It's a lot faster. So it's like this. Dealing with daily is like dealing with the hourly time frame on the currencies. That's the kind of volatility. That's the kind of speed that you should be concerned about if you're going swing on the cryptos. How many candle minimum to say that a fib is valid? One. Oh, you mean between swings? It depends. The way I look at it is if there's a 23.6% retracement, then I would consider it valid. So let me clear this off and use this as an example maybe. I don't like dollar Swiss, so I'm actually going to get rid of dollar Swiss stuff, okay? But just keep an eye out on 97.25. I'm going to highlight that there. Okay, so if we saw this as a move up and then we take this and that as a potential fib, how do we confirm that the fib is valid? The fib will not be valid until there's a 23.6% retracement to the downside. Okay, so if there's no 23.6% close below, if there's no close below 23.6%, then if the market goes higher, we actually need to track it higher. I think this one just created a new high, so nothing is valid until, let's say, it stops there, and then we actually have a candle that goes back below 23.6%. That's the only time it becomes valid. Otherwise, you just have to keep dragging it on, like this one, like the dollar Swiss. You just have to drag it on until there's a drop below 23.6%. That's why I say, if there's an hourly close below 0.9710, 0.97 or 0.9710, that's basically your cue to have a valid fibs. Otherwise, you don't actually have a valid fib. Okay. In fact, this one is still running on this fib here. Okay, so again, a little bit concerned here. 97.25 is basically where the 161.8% is located. So if you are long dollar Swiss, you might want to consider this as a potential warning. If it doesn't close above 0.9725, then you might want to take a look at the momentum or potential changes in momentum. If it does close above 0.9725, then that's fine. I think this one you can let it run to 0.9750. Okay. Or maybe if you want to hold it swing, then you can hold it potentially even higher towards 0.9775. But, I'm more of a play it safe kind of guy. But it really depends on your risk profile on this one here. Okay, great. Okay, just saw the text on dollar yen. Let's take a look at the dollar yen. Dollar yen is still good. It should be okay. um, Short dollar yen target right now. You open it at 135.50. What is your target, potential target level? This it's actually you can actually use a couple of things. One, you want to use support 3 on this one. If you want to, that's completely fine. But let me just warn you, we're dealing with 135 here. So 135 to me, it's more of a range breaker. If we have an hourly close below 135, this one can slide. Like this one can slide really, really quickly towards 134.50. Maybe towards 134. But if you're planning on your target, use this range here. That's basically your intraday range. It's basically around 67 pips. So if we break below 135, we kind of expect more of that range to the downside. Okay, so if you're already short at 135.50, that's really up here. You might want to have your stop losses about there. Yeah, you know what? It's so close to 135.75. You definitely want to have it at 135.75. In fact, right now, if you're short 135.50, it's much better to just move your stop losses to break even. Let the trade run, because if this one breaks below 135, it stops. There's a lot of stops at 135, right? There's a lot of sell orders at 135. Okay, if that sell order get triggered enough, this will slide. So we talked about the range with the dollar yen before. I think I talked about it since last week when we talked about potential towards 134. So it's actually between 136 and 134. We are actually around 135. Okay. A couple of big, orders at around 135. If this one breaks 135, we could see a quick slide towards 134.50. Is it going to be a quick drop towards 134? It might not be the case. Now, unlike the Euro Yen, the Euro USD, and stuff like that, we take a look at the pivots. I'm just going to get rid of this. Okay, this. Okay, if we take a look at the pivot and just the pivot, if you take a look at the pivot, it actually shrunk, right? In terms of range, it's actually shrinking. So, as I said, if we do break below 135, and in terms of 135, we break this on the hourly, on the daily. If we lose 135, we could see that sharp drop. So today, in terms of range, is actually smaller, so it's actually prone to a breakout. Okay, so unlike where the pivot on the Euro USD and the Pound USD, kind of widens the gap, this one here, that's from 70 pips down to 40 pips. So lost nearly about maybe 30%, 40% in terms of range. So this is actually prone for a breakout. You definitely want to keep an eye out on 135 on this one. So if you do have a short on this one, you should definitely consider getting out at 135. If you really want to push it a little bit more, you can actually use this fib here. You can go for that 127.2. That's around 134.50. So those are going to be a target level for dollar yen. Okay, so 135 or 134.50. Pick your poison. I mean, if you want to let this one run, then I don't see an issue with this being moved to stop loss. Stop loss being moved to break even. I'll let the trade run. If it hits, it hits. Doesn't matter. If it breaks below 135, then it might slide down to 134.50 for the dollar yen. Sorry, I just saw the target for the dollar Swiss. It's actually at 99.335. Moving close to parity is a bit tough, and it's still at 97 right now. I wouldn't even consider that potential swing trade just as of yet on the dollar Swiss. It's just too big and too much of a risk considering we have the NFP on Friday. For Euro USD, could you repeat once again when you're targeting just a little bit? Isn't based on the last flip? Isn't price can't break 23.6 and go down? Means a strong trend. Can we categorize hourly pound as a hidden divergence? Okay, let me just recap the Euro USD. So with the Euro USD, in terms of range, I'm actually going by this range. In terms of fibs, if you want to go by fib, you would probably go with this range and you're done with it anyway. I don't think this is actually tradable on the hourly time frame. This is actually tradable on the 15-minute time frame on the Euro and the UK breakout. But if you missed it out and if you wait for the hourly time frame, it doesn't become an ideal trade by using fibs. Okay. So in terms of my target, the reason why my target is so small, I'm actually using the range as my target level. So I'm just aiming for whatever the range is, and that's it. Okay, I got a sell position and Aussie yen. Sorry, I'm just catching up to the chat, guys. Just give me a second. Okay, I got a sell at 92.05. No, well, 92. Okay, stop loss 92.50. Target 91.40. I think the Aussie yen will go down because the trend is down and the Aussie yen breaks trend line. What I see, Aussie is very weak. You think price will go down to 91.10? I am kind of okay with anything between 90 and 91, as long as you orient yourself and you think that 91 cents it's gonna be a strong support. I think you're good. You have a short 92. Your stop loss is at 92.50. Let me just get this. You're shorting at pivot, okay? Your stop loss 92.50, basically this high there. In terms of target, 91.50, 1-to-1 risk reward ratio, support 2. I think it's okay. I'm still kind of expecting yen strength as well. So in terms of the Aussie yen, it's not really breaking out of the range. In fact, you need to be really careful with the Aussie yen. I know the pivot is showing you otherwise, but let me just recap something for you guys. We are actually going into a more of a sideways range. We've got the low. Sorry, we've got low. We've got high. Okay, so this is actually opening up. Your pivot is actually at 92. Your stop loss at 92.50 might be too tight. You might want to give about 10 pip room at around 92.60. In terms of target level, around 91.50, that should still be okay. Does that make sense? So, this fib, I can get rid of this fib. Actually, I can reverse this one. There we go. So, you're not really looking at much here. Does the momentum still point to the downside? I think so. But I think you need to keep an eye on 92. We basically need a daily close below 92. So if it does close below 92, then it should be okay. In terms of stop loss, if you put it at 92.50, I think that's a little bit too risky. You might want to have it at minimum 92.60. Target 91.50 should be okay. Can we categorize pound USD as a hidden divergence? Yes. Hidden bearish. Yeah. Sorry, I forgot to mention, but yes, you can categorize this as a hidden bearish if you want to. Okay. So all good with pound USD. I'm nearly there. Some of you are probably nearly there too. All right, guys, in English, please. I don't really understand what Vivek is saying. US oil. Okay, we'll take a look at US oil. I'll switch here. US oil. Whoa. I'll actually go back here because I need to keep all that drawing for oil for myself, so I can't afford to get rid of it. There we go. we're still within range. We are still around 100. For US oil, I think the overall trend might have shifted a little bit. We might potentially see a potential return towards 95 if we do maintain a position below 100. We have that sharp drop. Is it related to the death of OPEC leaders? I don't know, but I'm not long oil. I'm not short oil either. I'm waiting for a more viable position in oil. Right now, in terms of range, we are breaking lower, but overall this is the kind of the range here. Since our support, yeah, we actually do break support, so we might actually see this one bounce back up a little bit, I believe, if we have that on the 4 hourly time frame. Yeah, so with 4 hourly time frame, if the stochastics cross up, we bounce off 100, we might actually see another run up towards 104, 105. So in terms of oil, I'm not here to judge in terms of an intraday basis, but if the whole movement with oil right now is that I potentially look at a potential retest of 105 at this point in time. So keep an eye out on 105. If you do want to go long oil, go for 105. If that's the case, if you do want to go long right now, you need to have your stop loss below 98, potentially even at 97.50. Yeah, sorry, it's even lower than that. So if you do want to go long right now, just think about it. You could be aiming for 95. Just from a risk reward perspective, you need to risk about $3 to get that $5. Okay, I think this is more of a possible scenario for US oil. I just don't see a quick drop in US oil to be maintained. I don't see that happening. I think we're looking at a little bit of a recovery here. But if we do have a daily close below 98, I would stop out in position anyway. So if you are planning to go long, I think it's a little bit risky because this is at around 100 and we actually don't have any downside confirmation for US oil until it actually closes below 98 on the daily. Okay, so if you go by the hourly time frame, think of this as more of a pennant. Okay, and that's what you go with. Simple as that. Just think of it as a pennant or something in a symmetrical triangle. It's more of a pennant, I'll be honest with you. If today the market maintains a position above 100, then we might actually see that retest towards 105. But otherwise, we need a break below 98. So keep an eye out on this one. I'll have 98. Okay, so we need to have a sustained break below 98 for this one to be considered in a downtrend. If today maintains a position above 100, then we actually see a potential move towards 105. So I'm not one for intraday short-term trades on oil. But if you do plan to go long oil, just make sure your stop loss is at around 97.50. Your target level is at around 105. Okay, ideal. The risk reward ratio it still makes sense to me. Okay, about valid fit, because last week you said it's only 4 candles between swings, so it's not too valid. Yes, the shorter it is, the less, not the less probable, the less accurate it is. So just keep that in mind. If you have more of a sustained room for it to move, then it should be okay. But the key would still be that 23.6% break. All right, I just answered Ade for oil. Aussie CAD, Pound AUD, Aussie CAD. Okay, Aussie CAD, what do we have for Aussie CAD? I'll get rid of this one. I'll keep 89. Definitely want to have 89 around. That's basically where the resistance one is located. Do we see further move? This is going to be limited. You are probably going to see a move towards 89.25 on this one if we see that happen. Okay, likely you see that happen. We're likely going to see a move towards 89.25, but it's actually then going to pivot around 89, so that would be the likable range for the Aussie CAD. Is Aussie in a strong position right now? I don't think Aussie is in a strong position, so it might actually pivot around 89 for the Aussie Canadian. I don't use software to determine my trade. Why don't I trade on crypto? I do trade on crypto. I just don't have a lot of portfolio in crypto. Don't get me wrong, I have them. I just don't deal with it on a daily basis. That's just me. It's not that I can't predict it by technical means. I hold my position through technical means. I found out where my support is located through technical means. I found out when I get in through technical means. It's just this. The speed of it, I just don't have the attention for it. Okay, because I have to deal with equity market, I have to deal with currency market. I dabble in crypto, but majority of the assets that I have are not in crypto. Just I do it for fun. When it becomes less fun right now, I kind of steer away from it. So keep that in mind. Don't know why it is so strong. Search about news. There's no news about it. It's more of a safe haven thing right now. So there was a question right now, just now by Don, I believe, at the beginning of the session. What do you determine as a risk sentiment, risk off in the market? And I explained about the dollar index and the 10-year yield at the beginning of the session. So if you want to review that, review it. But right now we're actually looking at the market being concerned about recession. Also, since we talk about recession, don't forget there's actually the FOMC meeting minutes tonight, today, this afternoon, depending on where you are. Okay, we've got the FOMC meeting minutes today, and then we have got the ECB meeting minutes tomorrow. I'm not expecting much from the meeting minutes today, but again, the reason why there's a run to safe haven is this. I think the Fed needs to be more aggressive, one. And then there's that potential news about the ECB potentially having to hike rates earlier this month. Is it this month? I believe it's this month. And then there's that recession concern, right? So the concern right now, I know this sounds really weird, right? I know, but some of you guys have been following me since last year. On my webinars, right? You guys probably realize, or when we start the outlook, in fact, I always talk about, tapering, right? About not 6 months, maybe 7-8 months ago, we talk about tapering. We talk about potential interest rate hikes, how big and stuff like that. That was like really big. So that was then. That was 7-8 months ago. So we're 6 months on after that. We've got rate hikes, and then we've got inflation that keeps going on higher. So the concern right now is that because the inflation is still hot, it still goes higher. The Fed needs to be more hawkish. They need to hike interest rate. Now notice the speed of interest rate hike. It was 25, and then there was talk about 50, and then we are stuck at 50. And then the Aussie is a good example. RBA just hiked by 50 basis points, yeah? That was yesterday. Why does the Aussie USD fall instead of getting stronger when there's a 50 basis point hike? Because the RBA stopped being hawkish on their statement yesterday. Okay, there's no real follow through. I don't think that's going to be the case for the US. I think the case for the US is that I think we have a very clear message from the FOMC, and I think FOMC has been great in delivering the message. Bank of England has been really bad. ECB, not great either. I think Bank of England and ECB is not that great, but ECB is in a different place because ECB is a Eurozone, right? They've got different nations, each with different economic condition. With the US is actually pretty clear. So we actually have a clear message from the FOMC. The hearing on the Senate on the Housing and the Banking Committee 2 weeks ago, I believe. I think Jerome Powell was in a bad situation, but he insisted. He basically insisted that the FOMC will do whatever it takes to keep inflation low, right? To fight off inflation. That means by continuously hiking interest rate or by tapering quicker. Tapering is done anyway. So it's not like there's not a lot of choice right now in terms of the FOMC. I don't think FOMC is gonna back off and say like, hey, we've got the meeting minutes from the last meeting when they hike rates. They're not gonna say, they're not gonna hike rates again next month and stuff like that. So I'm not expecting anything new from the meeting minutes. I think we're expecting more of a hawkish stance coming out from the FOMC. I think that's going to remain the same. Nothing new on that front. So that's the FOMC. Sorry, I just ran off. I just remembered that there's the FOMC meeting minutes. Okay. If you take a look at pairs, it's shown stronger USD. But if you take a look at another market like the US30 or Bitcoin, there isn't much drop. Okay, when we talk about currency, obviously, when we talk about stock market, it's counter trade would be in the US, right? I mean, US30 is US stock market. You use US dollar to buy those stock market, right? So, in terms of a drop, let me just explain this. Let me just hide the pivots. If you don't think this is a drop on the US30, then you're sorely mistaken. That's a huge drop, right? Since the beginning of the year. The US dollar gets stronger, the dollar index goes higher, the index falls. When we talk about the fall in the index, we can talk about the first half of the year, yeah? That's how far it fell. It fell by nearly 20%, 19.78%. That's 7,313 point wiped out. Now, if I zoom out and to give you that perspective, take a look at this. That's nearly the same drop as the pandemic. Obviously, the pandemic is a little bit more, but we were talking about 7,000, 11,000 drop. So there is a drop. There's a correlation with the US 30. So I'm not saying that the dollar that goes up and then we don't see anything. It's just that you don't see it. It's not noticeable on a small time frame, right? It's not that noticeable. But if you zoom out, you take a look at the US 30, you can actually see that there is actually a significant drop in the US 30. So as I say, we talk about inflation since last year, yeah? We talk about tapering since last year and stuff like that. And now I'm saying, 6 months on, after 6 months, this is the damage it has done to the confidence in the market. And this is why there's a risk-off sentiment in the market. It's not something new. It's gradual, it's there, but it's kind of predictable. If the US hikes interest rate that aggressively, then some of these investors, I'll be honest with you, they're not really investing their own cash. Some of them actually start borrowing money from the banks and then start putting it in the stock market, hoping that it will have a much bigger return than their interest rate. This is kind of a sad truth about the whole investment world, but I'll be honest with you, that's basically a lot of the stuff that I saw. Not a lot of people actually have that kind of fund, so they actually bought the fund. So instead of using it to let's say finance a house, they took out a loan and then they just dump it into the stock market, right? So as interest rate goes up, obviously people are gonna be afraid, right? And then they're gonna say, you know what, I'm not gonna borrow money, I'm not gonna chuck it into the market. That's one. The other one is that US 30, a lot of the companies there are major retailers, obviously. They sell products, yeah. And then with interest rates going up, demands for these products is gonna fall. Okay, so we got supply side constraint that was pushing inflation up. That was the main cost. That was the main cause of inflation. Supply side constraint. That's pushing. The demand doesn't get pushed. The supply get pushed down. Supply get pushed down. There's not enough supply. Things get more expensive. That basically drives out the inflation. Okay. So we are looking at a scenario where inflation is actually starting to take effect into the market. There's a lot of consideration right now with higher inflation. FOMC is going to hike interest rate. The impact on the stock market, you can see there. It's not going to be immediate. That's kind of the difference between the stock market and the currency market. Okay, currency market, we're dealing on a day-to-day basis. We're dealing on a swing that happens. It might go up in an uptrend this week. It might go down in a downtrend next week. It just doesn't work that way with the stock market. Now, in comparison to Bitcoin, as I said, Bitcoin is not really correlated. It's not supposed to. It's not supposed to be correlated to what FOMC is saying, because the whole point with Bitcoin, as I said every week, is that the Bitcoin, the idea behind Bitcoin is to be decentralized. That's one. So it shouldn't be a central bank to kind of guide them. But the whole thing with Bitcoin was that it was mainly sentiment driven. It was really hype driven. Okay, so I'll pull up Bitcoin right now. I'm gonna hide this. I'm gonna show you the jump and the drop. Okay, so when Bitcoin spikes, it was during the pandemic. Yeah, some of you probably remember that the whole run up. I believe that was then Dogecoin. That was around the same time as GameSpot. That was when Reddit have had fun with it, right? And then the whole world just had fun with it. It pushes it up. So it was more hype driven. It's not really. There's not going to be any fundamentals behind Bitcoin. The logic behind Bitcoin is this: as Bitcoin get mined, the number that gets mined gets smaller and smaller, and then that's going to push price up. It's just that we saw a huge spike in the price movement, right? When it breaks above 20,000, runs up to 64,000. That's just crazy. That was a crazy run. We actually got rid of it. We actually kind of back to normal. If we go back to this high here in 2017, okay. I'm gonna get rid of it. I'm gonna get rid of that. Okay, go back to 2017, the high at 2017. That's basically the real support that we have right now, and that's basically what's supporting it. It was basically a retest of the previous resistance that hasn't been tested after that run up to 64,000. Okay, so this technical works. Yeah, I mean technical works to identify there's a footprint. There's a particular reason why this is actually flatlining at 20,000. One is the psychological price level, obviously at 20,000, and was also the previous high, 11 December 2017. Okay, that's basically it. Can we entry and exit with fib fan or fib channel for short-term position? Fib fan, yes. I'll talk about fib fan a bit more if there's demand for it. I've explained it in another language, but I haven't done it in English. But if there's a demand for it, do type it in the comment, and I might do that for you guys. Okay, noted. From my technical point of view, to Bitcoin, is it going to be to test another lower support level, or is it consolidation to reversal phase? We're not at a reversal phase as of yet. We are consolidating around 20,000. I don't see a quick sudden drop, but if we do see that quick sudden drop, we still have a bit more support around 16,000. But below 16,000, there's actually nothing else until about 12,000. I believe it's at around 12,000. But I'll just check. Yeah. Around 14, yeah, about 12,000. I mean, if we do break lower than 20,000, that's gonna cause a significant drive to the downside. Do we have momentum behind it? I mean, this is below 20, so it could be driven lower. I mean, we're looking at a weekly time frame. If we take a look at the monthly time frame, is there room for it to go to the downside? I don't know. I'll be honest with you. I'm not quite sure on the monthly, but we don't need to go that far. Go by the weekly time frame. I would equate weekly on Bitcoin. It's similar to how daily is, so that's more of a reference point for me, just because of the volatility right now in Bitcoin. So I'm actually more on the weekly guy. Is it time? Is it done? I don't think it's quite done yet. I don't see any significant break on the daily either. So week by week, we're still being pressured lower. If we see a sustained weekly close above 24,000, then that might be Q. There's a potential for reversal if it crosses beyond 24,000, 25,000. But until then, just don't see that happening yet. Okay. So we can wrap it up for tonight. Good luck with your trades. Don't forget about the FOMC meeting minutes and then the ECB meeting minutes tomorrow. And then we've got the ADP. Not much to deal with the ADP. Got the NFP. NFP is projected to come in a little bit lower, I believe. Let me just double check. NFP unemployment is going to be unchanged at 3.6%. So if we do see unemployment drop down to 3.5 or remain stable at 3.6%, no big deal. But if it drops down to 3.5%, then the US dollar might rally. NFP employment numbers expected to come in at 275,000 this month, a drop from 390,000 previous month. So if it spikes up above 350,000, that would be really, really positive for the US dollar. Okay, so that's it for tonight. Thank you all, and good luck with your trade.